Do you ever feel like your business is stuck in a financial rut? Like you're constantly chasing payments, struggling to bridge those unpredictable cash flow gaps, or just need a quick injection of capital to seize a new opportunity? It's a common challenge for small business owners, and it can be incredibly frustrating when traditional banks seem to put up endless hurdles. You know the drill. Mountains of paperwork, weeks of waiting, and often a demand for a near-perfect credit score that feels utterly out of reach. Today, we're diving deep into Fundbox. We're going to pull back the curtain on their requirements, focusing specifically on that all-important credit score. But we won't stop there. We'll explore what else Fundbox looks for, how their application process works, and even discussing the pros and cons to give you a truly comprehensive understanding. So, if you're a small business owner in the U.S. looking for a lifeline or just curious about alternative lending options, stick around. This video is for you. First, let's address the elephant in the room, the question that brought you here. The minimum credit score for Fundbox. Fundbox generally requires a personal FICO score of 600 or higher. Yes, you heard that right, 600. This is a significant point because it makes Fundbox a far more accessible option for many small business owners who might not boast an excellent credit score. Traditional lenders like big banks often demand scores well into the high 600s or even 700s, effectively shutting out a large segment of the small business community. Now, while 600 is the widely cited minimum, it's important to remember that this is a minimum. Meeting this doesn't guarantee approval, as Fundbox considers a holistic view of your business's financial health. Think of it as the first hurdle, not the finish line. While a 600 is what you need to get your foot in the door, a higher score, naturally, can strengthen your application and potentially lead to more favorable terms. Some sources even suggest that while 600 is a minimum, Fundbox often approves borrowers with scores closer to 650 or higher for their best rates and higher credit limits. But what exactly is Fundbox looking at beyond your personal credit score? This is where their approach truly stands out. Unlike many traditional lenders that rely heavily on a rigid credit score cutoff and extensive historical financial statements, Fundbox leverages technology to assess your business's real-time financial performance. One of their primary methods is by connecting to your business bank account or accounting software. This is a crucial step in their application process. Fundbox's proprietary risk technology then analyzes your cash flow, transaction history, and overall business activity. They're looking for indicators of a healthy, active business, such as consistent revenue, regular transactions, and a positive cash flow trend. Think about it this way. A traditional bank might ask for 2 years of tax returns and a detailed business plan. Fundbox, by analyzing your live bank data, gets a more immediate and dynamic understanding of your business's ability to generate revenue and manage its finances. This data-driven approach allows for quicker decisions and often a more flexible assessment of creditworthiness. Beyond the credit score and bank account analysis, Fundbox has a few other key eligibility requirements that your business needs to meet. These typically include time in business. Fundbox generally requires your business to have been in operation for at least 3 months, though some sources indicate 6 months or more is preferred. This is significantly lower than many traditional lenders who often demand 2 years or more business history. This makes Fundbox a strong contender for startups and newer businesses that are still building their track record. Annual revenue. Your business needs to demonstrate a certain level of revenue. While some older information might suggest $100,000, more current and widely cited figures indicate a minimum of $30,000 in annual revenue. This, again, is a relatively accessible threshold for many small businesses. Fundbox looks for consistent revenue to ensure your business has a capacity to repay any drawn funds. Active business checking account. This is non-negotiable. You need an active business checking account with at least 3 months of transaction history. This is how Fundbox connects to your financial data and assesses your cash flow. U.S.-based business. Fundbox services are currently available to businesses based in the 50 U.S. states, Guam, American Samoa, North Mariana Islands, Puerto Rico, and U.S. Virgin Islands. So, to summarize the core eligibility, you're looking at a minimum personal FICO score of 600, at least 3 to 6 months in business, a minimum of $30,000 in annual revenue, and an active U.S. business checking account. Now, let's talk about the application process itself. One of Fundbox's biggest selling points is its speed and simplicity. You can typically create an account online. This involves providing basic information about your business. Connect your business accounts. This is where you securely link your business checking account or supported accounting software like QuickBooks, Xero, FreshBooks, etc. to the Fundbox platform. This is a crucial step for their automated assessment. Receive a credit decision. Fundbox's technology quickly analyzes your data. Many users report receiving a credit decision in minutes, sometimes as fast as 3 minutes. Access funds. If approved, you can draw funds from your line of credit, and these funds can often be in your business bank account as soon as the next business day. A critical point to understand about the application process and its impact on your credit score is this. Fundbox performs a soft credit pull during the initial application. This means that your credit score will not be impacted when you simply apply and check your eligibility. A hard credit pull, which can slightly impact your score, is typically only performed when you make your first draw on the line of credit after approval. This is a huge advantage for businesses that want to explore their options without jeopardizing their credit score. What kind of funding can you expect? Fundbox primarily offers a business line of credit. This is a revolving credit facility, meaning you can draw funds as needed up to your approved limit, and as you repay, those funds become available again. This flexibility is incredibly valuable for managing fluctuating cash flow, covering unexpected expenses, or capitalizing on immediate opportunities. Fundbox lines of credit range from $1,000 to $150,000. In conclusion, for many small business owners struggling to secure funding through conventional channels, Fundbox presents a compelling alternative. Their minimum credit score requirement of 600, coupled with their innovative approach to assessing business health through real-time financial data, makes them a highly accessible and efficient option for managing cash flow and seizing opportunities. While the cost might be higher and the terms shorter than traditional loans, the speed, flexibility, and lower barriers to entry often make it a worthwhile solution for businesses in need of quick and reliable working capital. Understanding these details empowers you to make an informed decision about whether Fundbox aligns with your business's financial needs and capabilities. With that said, thanks for watching, and until next time.